Hey everyone, welcome back to the channel. Today, we're diving into a story that feels like it's ripped straight from a modern headline, but it happened over 300 years ago. It's a tale of ambition, greed, and a spectacular crash that shook an entire empire to its core. We're talking about the South Sea Bubble, often called the world's first major financial crisis. So, how did it all start? Picture this. It's 1711 in Britain. The government is drowning in debt, mostly from years of expensive wars. They owe a staggering amount of money, and paying it back seems almost impossible. This is where a new, ambitious company steps in. The South Sea Company. They came to the government with a brilliant, almost too good to be true proposal. "Let us take on your debt," they said. "In exchange, give us exclusive trading rights with Spanish South America." Now, this was a huge deal. The colonies in South America were legendary for their riches. Gold, silver, you name it. The promise of tapping into this wealth was incredibly alluring. The government agreed, and the South Sea Company was born. There was just one tiny problem. Well, actually, a massive one. Britain was still at war with Spain, so these exclusive trading rights were basically for a market they couldn't even access yet. The peace treaty that eventually came in 1713 gave them very limited access, one ship a year, and the right to supply enslaved people. It was a far cry from the free-for-all trade everyone imagined. But did facts like these stop the hype? Not at all. The company's directors were masters of marketing. They talked up the potential of the South American trade, painting visions of unimaginable profits. They spread rumors, paid politicians, and created a powerful narrative of inevitable success. And the public, from lords and ladies down to ordinary citizens, bought it completely. The real frenzy began in 1720. The company made an even bolder move. They proposed to take on the entire national debt of Britain. To finance this, they started selling shares or stock in their company. And this is where things get wild. The company used every trick in the book to drive up its stock price. They offered installment plans for buying shares, making it easy for people with little money to get in on the action. They even loaned money to people specifically to buy more South Sea stock. This created a self-feeding cycle. Loans created demand. Demand drove up the price, and the rising price made everyone want to buy more. The share price exploded. At the start of 1720, a single share was worth about £128. By the peak in late summer, it skyrocketed to over £1,000. It was pure mania. People were selling their homes, their land, everything they owned, to pour their money into the South Sea Company. Famous figures of the day, like Sir Isaac Newton, got swept up in it. He invested early, cashed out with a nice profit, but then, seeing his friends get even richer, he jumped back in at the peak and lost a fortune. He later famously said, "I can calculate the motion of heavenly bodies, but not the madness of people." This success inspired a wave of copycat companies, known as bubbles. People were starting companies for the most ridiculous things. One was for a wheel of perpetual motion, another was famously advertised as a company for carrying on an undertaking of great advantage, but nobody to know what it is. People were so desperate to get rich quick that they threw money at anything. The market was completely detached from reality. But as we all know, what goes up must come down. By late summer 1720, the bubble was stretched to its limit. Insiders at the South Sea Company, knowing the business had no real profits to back up the insane valuation, began quietly selling their shares. As more and more shares hit the market, the price started to wobble. Panic set in as quickly as the mania had. Bankruptcies surged, and the public was furious. They had been lied to, and they wanted someone to blame. The scandal reached the highest levels of government, with accusations of corruption and insider trading against politicians and the company directors. Parliament launched an investigation, which uncovered widespread fraud. Several politicians were disgraced, and the company's directors had their assets seized to compensate the victims. The government managed to stabilize the economy, but the trust in the financial system was shattered for a generation. So what can we learn from the South Sea Bubble? It's a timeless lesson about the dangers of herd mentality, speculation, and the illusion of easy money. It shows how powerful stories can be, even when they're not based on facts. And it reminds us that when something seems too good to be true, it almost always is. The technology may have changed from coffee houses to crypto exchanges, but human psychology remains remarkably the same. This incredible story isn't just a historical footnote. It's a blueprint for nearly every financial bubble that has followed. It laid the groundwork for modern financial markets, and the regulations designed to protect us from our own worst impulses. Thank you so much for joining me on this journey back in time. It's a fascinating and cautionary tale, isn't it? If you enjoyed this video and want to explore more stories like it, please hit that like button and subscribe to the channel. Let me know in the comments what you think, or if there are other historical events you'd like me to cover. Thanks for watching, and I'll see you in the next one.